Hello, my name is Shobhit. I'm the CEO and co-founder of ForEXIM Solutions. Let us start with what's happening on the currency street. Starting off with our currency pair, the dollar rupee. Yesterday, the dollar rupee had a gap up opening at 77.75 against the previous day close of 77.73. And after opening, the pair was trading in a very tight range with depreciative bias, possibility due to the higher crude oil prices. We heard the presence of RBI near 77.80 levels, and today it opened 5 paisa higher at 77.81 since it's closing at 77.76 yesterday and is showing considerable resistance at 77.85. We are looking closely if the pair has any intention to touch 78 today, but it quite sorts of looks unlikely on a week ending Friday. Moving forward, the dollar rupee price action and the technicals. The dollar rupee is stuck in a very tight range between 77.45 to 77.80 since the last 3 weeks. Well, any sideways may see a 25-30 paisa quick movement, and while staying below 77.85 levels, momentum in the short-term chart is pointing to a downside. Below 77.60, apologies, the correction might take a little sharper. Such a dip could go even further towards 77.45, and it needs to rise above 77.80 to lessen the chances for the expected corrective dip and start moving towards 77.98. Some catalyst would be needed to drive the price above 77.8050 to trigger the up move. And on the other currencies, what we see is the dollar is on the rise as traders look for Fed clues in the form of the US inflation data. On Friday, the dollar rose to a 2-week high against the euro ahead of inflation data that might shape the Federal Reserve's policy tightening course, and after the European Central Bank said it will begin its rate hike campaign next month. The dollar index, which compares the greenback to 6 other currencies, remained unchanged at 103.3 after gaining 0.7% overnight. On this week, it has gained 1.1%, the largest percentage rise since the last week of April. And after losing 0.92% against the dollar on Thursday during a tumultuous ECB-driven trade, the euro fell to 1.0611 in early Asia trade, which is its lowest since May 23. Moving over to a broad market snapshot. Well, the inflation is the only metric that matters for the Fed right now, and tension among global investors will likely remain high before today's CPI release in the US. Even if US CPI inflation comes down a little bit more than economists' expectations, the Fed will most likely stay locked into delivering a 50 basis point hike over the next couple of policy decisions. The ECB brought down the curtain on years of ultra loose policy, committing to a 25 basis point increase in interest rates next month. For September, they remain data dependent, but they essentially communicated that they will have to see an improvement of the inflation dynamics in order not to hike 50 basis point rate hike. Beyond that, a sequence of gradual hikes will follow. Moving over to commodity insights, oil. Fears of further COVID lockdown measures in Shanghai outweighed steady demands for fuels in the world's largest consumer, the US states, on Friday, as oil price dropped but remained around 3 months highs. After a 4% drop the day before, the Brent oil futures for August were down $1, and we expect oil to be a contributing factor and a shaping factor for giving the market direction in the times to come. That's all on the currency street. Thank you and have a wonderful weekend. Thank you so much.